So Rivian produced a little under 14,000 vehicles and delivered 13,600 of them during the first quarter. That resulted in CFRA, that's an analyst on Wall Street, lowering its price target to $8 from $10. Rivian stock carries an average analyst price target of $17.74 per share, and that's still roughly about a 75% higher close than where current prices are. All right, so we're going to go directly to the weekly chart, and do want to show you this flip zone. So you had support, became resistance, which served as support, and you did have a nice bump up to that $24 level. But again, you had support, which became resistance once again. And on the pullback, again, price was above this support resistance band. So you had basing, right? The buyers and the sellers were duking it out for position. And on earnings, well, price sold off. And in the process, it did form a weekly sell level at $16. You have this drop, base, then the drop. Now, you know this level is strong because on the pullback, we couldn't even get to these levels before the sellers stepped in once again. Now we have prices basing for the last couple of weeks, and I personally want to see prices move higher, only to see prices drop. Now I do have a $5 target. Whether that get hits or not is to be determined. But let's get into these analysts' predictions and how they are roughly 75% above current price. All right, so again, we talked about Rivian's delivery numbers for the first quarter. The company has guided for full year production of 57,000 compared to an actual production of 57,232 vehicles in 2023. All right, so they met the goal for 2023, but we're in a tougher environment in 2024 as interest rates are now hurting people's pockets, and which is also going to hurt EV demand. Now, Wall Street analysts provided mixed opinions about the numbers. Again, we talked about CFRA analysts. In particular, Garrett Nelson lowered his price target to $8 while maintaining a sell rating. What's interesting is Nelson now carries the lowest price target among all analysts, and he ranks roughly 4,000 out of 8,700 analysts. So, he has some weight in what he says. He carries a success rate of 63% and an average one-year return of 1.4%. That's not good. That's not good. Which is why Warren Buffett says just put your money in an index fund, because analysts in general can't beat the stock market overall. All right, so Nelson believes that Rivian has significant demand, scale, and cash burn issues, which will result in lower net sales for Q1 when compared to Q4. Then you have this other analyst at Truist. His name is Jordan Levy. He took on a more bullish view and reiterated his price target of $11 and a hold rating. Levy believes that the production and delivery figures should help alleviate some concerns surrounding EV demand. However, the analyst advised that investors should remain aware of the planned normal facility shutdown, which could affect volume, margins, and cash flow. Then you got another analyst at Cantor Fitzgerald. His name is Andy Shepard. He has a price target of 23% and an overweight rating. His price target utilizes a 10-year discount cash flow model with a weighted average cost of capital of 10% and a terminal growth rate of 2%. So there you got a bunch of analysts on Wall Street with different price targets, and which is why I tend to lean on price action and what the charts are telling me. And what the charts are telling me is that you have a huge level of resistance between $14 and $18, and I don't anticipate price getting above $20 anytime soon. So let me know what you think in the comments. Price is at $10. Do we hit 15 before we hit 5, or do we hit 5 before we hit 15? Thanks for watching. Subscribe. Please like the video.